Thanks, Anisha. Good afternoon and welcome to the Market Closing Show, Business Today Show with India Today. It's 3 p.m. where we get you all the market closing action. Let's first look at the markets currently, 25,265. We've dropped to the day's lowest point, 1.2% lower. So the markets are in a state of selling pressure across the board. You do see broad markets also continuing to see sharp cuts in the markets. All the sectors are down into the red. Look at the Nifty, look at the Nifty Bank. Both the major indices are down. Real estate sector is the top laggard among sectors. 4.6% of a cut in a single intraday session for Nifty Realty. Look at what is happening on the mid-cap and the small-cap 100 indices as well. About 2.5% of losses, underperforming even the benchmarks as far as the mid and small caps are concerned. Sharper pain being felt here. Mid-caps have also slipped below the 100 DEMA mark as well. Autos are driving in the slow lane, 2.2% lower in trade. At least 5 indices are down by 2%. One of them is down by 4.5% and more. At least 10 other indices are down by 1% or more than that as well. So you can see it's a state of sell-off in the D Street. India VIX is higher by 6.2%. Fear coming back onto the D Street. Only 3 stocks on the Nifty are still hovering higher. It's TCS, HDFC Bank, Dr. Reddy's. Rest, 47 stocks on the Nifty are all down into the red. But clearly, breaking on your screens, the bullion rally continues. Gold and silver continue to hit fresh record highs. Gold has now crossed the 1.5 lakh rupee mark for the very first time. MCX gold is up by 4,000 rupees at 1.52 lakh rupees per 10 grams. MCX silver is up by sharp 17,000 rupees, now at 3.27 lakh rupees per kilogram as well. These are record high levels that are being seen on gold and silver. Clearly, the safe haven play is being seen on your screens. Markets being sold off. It's the equities being sold off, but bullion, gold and silver again seeing strong interest from investors. Let's welcome our guest on board, Mr. Ashu Madan, the MD of JM Financial, to help us understand what's really going on with the markets. Warm welcome to you, Mr. Madan, and thank you so much for taking the time out. Help us decipher this sharp sell-off into the markets. Is it again the geopolitics weighing heavy, even overtaking what was happening in the earnings aspect? We were looking at some signs on positivity there in the first, second week, but there has been further sell-off again from the global shocks.
So, Sakshi, I think this is a very unfortunate panic reaction which is happening because of the, global cues. And above all, we people in a denial mode that this kind of a carnage or damage can happen. Because we were so always complacent about the domestic money that ignoring the rallies which was happening in bullion, ignoring FI selling, ignoring the rupee depreciation. When you are in a wishful positive mode, you ignore all other parameters because of that conditioning of long term sahi hai and the bull market and that domestic flows. So I think some point in time this is converging into all this, and probably right now that this panic time is because of the expiry, and lot is to be attributed because of the expiry also. But things are not looking good. So one has to, that is why last 10-15 days we were sharing with our clients the hedging strategy for February, for March, for February, for budget, and for, visualizing this kind of a fall, that because of all this which is happening in the world and probably what the commodity prices are showing, there could be some chaos. So I think that chaos is happening.
Absolutely. So, Ashuji, what are you advising the average small retail investor to do at this point in time? Those who are watching you at this point in time, they had been banking big on the new year, a new set of opportunities to come in. And yet again, with a hope that you also pointed out has been shattered yet again because of the global geopolitical shocks that we are facing. Gold and silver, it was already looking valuation-wise extremely expensive, which had already run up too fast. 85,000 rupees is what we've seen a rally in silver in first 20 sessions of 2026 alone. This has never happened in the history that we have seen. Just in 20 sessions, you see silver prices jump by 85,000, 87,000. Today alone, it's 17,000 rupees up. How are you advising the clients out there?
Till yesterday night, I was recommending to buy gold bees that please continue to buy gold bees. Silver, it is too volatile, and I mean, you cannot manage your trade. But we are still recommending clients to buy gold bees. I think that's the best way. Last time also when we spoke, I think this gold and silver ETFs we discussed is the best way to
Yes.
invest in this kind of a market, and we are still continuing to tow the same line. And also for retail investors, Sakshi, to negotiate this kind of a market, it is easier said than done. They cannot really do anything because every fall looks like an opportunity, and after
Yeah.
a particular time, that opportunity becomes catching a falling knife. So I would say that some semblance will definitely prevail. If you're holding on to something, please hold. The problem is not that. Sakshi, with our markets or our narrative and everything, you know what is the problem. Problem is
Hmm.
not that. I mean, everybody will remember now the Warren Buffett stories. Like when you see
Yes.
blood on the street, this is the time to buy. Definitely, this is the time to buy. But when there's a euphoria and the valuations are high and you're making everything is looking hunky dory, then nobody knocks your door and tell that please book profit, take your money
Yes.
back, because then every chart is becomes a screaming buy. And the long term driven, the long term industry. They're arrogantly best at that point in time. For me, profit booking is very important. But yes, certainly at these kind of a panics, there would be some opportunities emerging out to be. So one should not panic at this, but definitely
Okay.
keep looking for the opportunities.
Keep looking for the opportunities. Don't panic looking at these sell-offs. This is unfortunate. Does not look good at this point in time. But, just hold on and don't just panic sell at this point in time is what Ashuji clearly mentions at this point. Stay on with us, Ashuji. There's a lot of Davos news coming in. We have now to show you what exactly has become not just a buzzword, but a key aspect in several boardrooms, especially in the tech industry. AI is the new normal in 2026. The global IT industry is at a decisive inflection point. How are tech firms really reinventing their business models to deal with AI and to, of course, win the AI race? And is the worst finally over for the IT sector? From Davos 2026, HCL Tech CEO and MD Vijay Kumar speaks exclusively to Business Today Group editor Siddharth Zarabi. Let's listen in.
With AI and what it means for the IT services sector, the good and bad really, as you see it, the impact of AI on your industry.
Yes. Thank you for having me here. And as you called out, we are the only services partner, global GSI for OpenAI. We see tremendous opportunities. From an industry perspective, while AI is a very big inflection point for the any services industry, because knowledge is what is getting us commoditized, right? That's really what it is. So the opportunity for us is in two dimensions. One is transform our existing service footprint using AI. It might mean reduction in revenue in some areas, but we want to be proactively transforming our services. That's something which we're doing it proactively. We were one of the first, and our clients have greatly appreciated it. So that will mean some deflation in revenue, but you can also expand your pie because IT services space is a very, very large market. So that's one. The second aspect is AI is also opening up completely new services, completely new areas of discretionary spend, which was not the focus of a lot of tech services firms. Like physical AI is a big area, which is about uh, sensing, understanding, and acting on physical objects, right? Whether it is warehouse management, remote surgery, or managing safety in mines and ports, all of that can be done very, very efficiently using physical AI solutions today.
Will AI kill the back office as we know it?
Yes, the construct of that would look very different. Today, it's very people intensive. The way it is evolving, it will be a lot more agentic and really amplify the potential of people to deliver more, but with significantly lesser number of people. To that extent, the back office operations offers the biggest opportunity to be transformed using AI.
Coming to you, Mr. Madan, how are you approaching the IT sector at large? Of course, most of the earnings that have come in from these big 4-5 companies, how have you made your own analysis? HCL Tech itself came out better than expected numbers despite that one-off hit because of the labor codes there. What exactly is your thought process as these companies are evolving their strategies to deal with AI and, without AI kind of systems, and how HCL Tech, TCS, all of these big IT firms will look like over the next 4 or 5 years or 10 years from now?
The confusion will continue to prevail. Sakshi, this bounce back has happened because it was under-owned sector, down and out, and maybe better than expected results. But AI chaos is yet to happen, and it will be continuously evolving. And to precisely, or maybe not just precisely, otherwise also to predict, that how every sector and every company will play out, it is a very difficult call. So looking at the rich valuations and the way it is being owned by, all big players, I would suggest that this is not a sector now to be touched by retail. Please avoid this, because every quarter the story would be different. And every quarter there will be different kind of a volatility. You cannot even predict and create a view in these particular stocks or a sector even for 6 months. You asked about 8 years, 5 years, 4 years, 10 years. That's too long a period. I'm saying for the next 2 quarters, you will see the volatility amongst between these companies also, and the vast difference between the results and the outcome of these strategies. So it is very difficult for a retail investor to play. So at best, it is avoidable at the moment.
Avoid IT at this moment is what Ashuji really says. Again, getting you some more conversations from BT Davos 2026 on the sidelines of the World Economic Forum annual meeting. Business Today Television also caught up with Nadir Godrej, the chairperson of Godrej Industries Group, in this exclusive conversation with Siddharth Zarabi, Group Editor, Business Today. Godrej says that while tariffs have impacted some Indian businesses, the broader economy still remains resilient. Let's listen in to what he had to mark.
There's a new Greenland tariff to be concerned with, and so many other changes. So the question really is, in all of this, how is the mood of CEOs shaping up, including those you have been interacting with here?
In India, although several businesses have been affected by the tariffs, the economy as a whole has hardly felt it. And whatever we have lost in exports to the US has largely been made up with exports to other countries. And the net effect has been that lots of countries that were not very close to each other have been thrown closer together, including India and China. And I'm pretty sure that India will overcome this. This will be a problem for other parts of the world. And it could also mean that America loses a lot of friends, because we don't know who's left as America's friend now.
Earlier today in one of our interactions here at the studio, a point was made by a guest. And this was to for us to distinguish between what may be happening at a government to government level versus what is happening at a company to company level, America and India. And the example of Google or Amazon or other companies, Microsoft, just three big names, and there are of course smaller ones as well, who have committed massive amounts of investments to India in the recent past. Is that therefore a sign of the time of how companies are continuing to do business, ignoring some of the geopolitics and the noise?
Yes, it's a sign of that. And it's a sign that tariffs may not be hurting other economies as much as would be expected. And undoubtedly, the tariffs are likely to hurt the US economy.
Right, some interesting conversations there. Mr. Madan, coming back to you. There are two things that I want to ask you. One is of the tricky situation that you think that investors are dealing with right now. We're 400 points down right now on the Nifty. One would be to trying to find out how much more downside, okay? And should I be aggressive in this kind of a fall? Maybe look at the long term. Once all of this will be over, I will still be probably investing at better times. Yet at the same time, undermining what's really happening in the global order and not really deciphering the bigger picture there. How much more is there to go? Just like how Mr. Godrej pointed out, who will be left as Trump's friend? Is somebody, nobody knows the answer to that if he continues to go like this. So give us an understanding. How should an investor really understand?
It is very difficult, as I said. I mean, this is a very common question everyone is asking. But I'll give you a perspective. See, besides yesterday, the only good thing, very different thing which we witnessed in the markets, actually this time, because you are also tracking markets. Every time used to be stocks falling like in, I mean, a pack of cards, and index was like a drishyam and holding and giving you a
Yeah.
wrong picture. And that was the frustration of most of the people, that index is at 26,000 and stocks are 22,000. So this was the only fall. I mean, this last 800 points fall, or I mean, now it is almost 1,000 points fall
Yes.
from 26,200 to 25,200, barring today. Well, index was falling because of HDFC Bank, Reliance, and couple of three, I mean, big wigs. And stocks were still much, much higher than the recent lows which we have witnessed in the market. So that was something very, very encouraging and heartening. Otherwise, portfolios were bleeding, and that was
Yes.
adding to the frustration that the market is at all-time high. And so till yesterday that was fine, but today I think I all hell broke loose, kind of a situation, and everything is down. But the important question is, Sakshi, which we have been discussing since last 6 months. We are in for a long consolidation. I mean, last 4 5 months we have been talking to each other.
Correct.
Last year also I'm saying that we might remain in the range 25,000,
Yes.
26,000. We might spend 6 months, 1 year, 1.5 year, 2 years. That is what somebody has to negotiate. I mean, because that patience, if you are really long term in this kind of a market, one, I'm not a philosopher of long term. People are also losing patience. I mean, because
Yes.
as I said, that in this market, the fear is not about, I mean, tezi or mandi. The lack of interest. The lack of interest is creeping in, and people are getting disillusioned with this market. And that phenomena might continue to remain as it is, because again, we will be in a consolidation. We might see a lot of panic happening, but we are still 25,000, and we see a lot of euphoria happening. We're still at 26,000. So between 1,000 1,500 points range, we have spent more than 1 year. Probably we'll spend another 1 year. That is one has to
Right.
learn to negotiate if you can do that. So that is the big picture for me.
Fair point. Let's also shift focus to the metals story, something that was still holding ground in the first initial few weeks of 2026. Nalco is gearing up for strong operational year FY26 with record metals and chemicals output, with production momentum translating into realizations. That's the big question now. All that and more, we've actually got to have from Nalco CMD Brijendra Pratap Singh. Let's listen into what he has said as he has spoken to Business Today's Aishwarya Patil.
As far as the production of this year is concerned, the year 25-26, up to H1, we have done best ever H1 performance in terms of physical performance. Up to Q3 also best ever Q3 performance physical. Our H1 physical and financial both was best ever physical and financial. So we have increased the production of both chemical and metal compared to last year. Like last year, we have done physical performance of alumina was around 20.5 lakh tons of alumina production annually. This year we have planned for 22.5 lakhs, and we are ahead of target by around 90,000. So we may be touching around 23 lakhs at the end of this financial year as far as chemical is concerned. Metal also last year we did 4,60,000, and we will be finishing this year around 4,70,000, which we have planned. So 10,000 more of metal. As far as decline in the revenue of chemical is concerned, what you were talking about, that is because of the prices of the alumina, which has gone down. If you see the quarter to quarter comparison, Q3 last financial year, it was somewhere around $700. After that, it came to around $580 in Q4. After in the Q1 of this financial year, it started again declining. It has come down presently to around $320 to $330.
Ashuji, metals, which had so far been looking very attractive, along with the precious metals move, copper at record high levels, Nalco, aluminium, all of these kind of stocks also moved up. Hindustan Zinc, copper, they were now beginning to become a retail investor's favorite. How are you reading into the current lines there?
I think one should still continue to hold, because in the this global chaos, metals and these precious metals, this will continue to outperform. So before you ask Sakshi, I mean, you ask your the typical question, one sector or a stock or something.
Yeah.
So I would say metal, along with
Okay.
PSU Bank, and my favorite. I mean, sixth or fifth time I'm repeating on this show. My favorite PSU banks led by SBI. So these are the only two safe havens which I can see till now, and I still feel that metals will hold, will outperform compared to the rest of the market, and PSU banks led by SBI. They still continue to, I mean, be our favorite. If somebody puts a gun on your head that he has to buy something, or which
Yes,
other sector
yes.
you have to say. So I think it is still PSU bank led by SBI and metals. These are the two safe havens as of now.
Okay, two of the safe havens in this continuing uncertain world out there, viewers. Clearly, Ashuji has mentioned for you, stay on with metals, stay on with PSU banks led by SBI. You may still be better off amidst all this chaos. Last few seconds before the market shuts shop, let's shift focus there. The Nifty is now down 360 points, 25,225. Just managed to climb back above that 25,200 odd mark to end above that, but still lost about 360 points in trade. All the sectors down in the red. Real estate down by 5.3%. That's where the maximum crack happened. 2.8% lower for small caps. Mid caps down by 2.6%. Autos dragged by 2.5% in trade. All the sectors, of course, pulled down, with the India VIX up 7.5%. Only three winners: Dr. Reddy's, TCS, HDFC Bank managed just about slight gains in an otherwise weak market. Rest all of the stocks really fell flat. In fact, let me also get you some more interesting conversations from Davos at a time when global consensus on climate action is being tested, especially with the US stepping back from key climate and renewable pacts while prioritizing crude oil. Does this shift pose a risk to India's renewable energy ambitions, or does it in fact strengthen India's position in the global clean energy race? Let's catch Davos 2026, Mr. Prahlad Joshi, the Minister of New and Renewable Energy, in an exclusive conversation with Business Today Group Editor Siddharth Zorabi and also Rajdeep Sardesai, Consultant Editor, India Today.
One of the things, and since we are at Davos at the World Economic Forum, is how geopolitically and geoeconomically the consensus on climate change and renewable energy is being changed by one particular country. Many of the pacts the United States of America is pulling out. Europe remains committed. We have gone beyond even our commitments, like you also pointed out. Do you see there is some risk factor on account of global changes and approach towards renewable energy? The United States is again prioritizing crude oil. Is that a risk to India's ambitions in this space?
I don't think that is a risk for us, according to me, because there are many countries in the world even today which prefer renewable energy, but especially in the global south. The requirement is finance. First thing is finance. Second thing is technology. Third thing, as we go on adding the capacity, the question of grid stabilization for that investment, these are all the things where multilateral bank funding, blended finance, these are all the things which are needed. Otherwise, there are many countries where they are now telling by this year they are going to levy the carbon tax. So this carbon tax issue, naturally wherever India exports and wherever any other country exports, this is an advantage for India, because as far as wheat is concerned, our 5 million metric ton of green hydrogen, it is quite on track. The lowest, whatever we have discovered the price as far as the green ammonia is concerned, it is the lowest in the world today, which we have achieved it. And under the leadership of Prime Minister Shri Modi ji, whatever in these days, you can imagine when it was less than 3 gigawatt in 2014, as far as solar energy is concerned, today it is more than 130 gigawatt. And wind, it was 22, 23 gigawatt. Today it is 55 gigawatt. Today India is actually, it is generating. And so modules, it was almost little 8 gigawatt or something today. Today it is 144 gigawatt, and today we are surplus and we are planning to export it. And we are ready to export to the world as far as module is concerned. Cell, we have reached 27 gigawatt. So we are on track. As I initial remarks I pointed out, we have 17% of the world population, but our emission is 4%. In spite of that, Prime Minister Modi's goal is that for the sake of the earth, for the next generation also, we should work.
Ashuji, renewable energy, is that a space that comes on top of your radar when you plan ahead for your clients, for your investors' portfolios for the long run?
No, Sakshi, I think that the theme is overdone, and I'm not very optimistic and positive. I think the good times is behind us as far as stock market, probably the pricing is concerned, or the theme would continue, definitely continue, but I think the valuations are ahead of the theme. So I think that's not something one should pursue further and come back to the more conventional sectors or probably themes. Some point in time, different sectors will perform, but I think. There's a risk involved in now investing in renewable energy. So as it see, there are a lot of things which on the ground it is different, and the prices of the stocks is different because I mean, see, the market is always ahead of what is happening. So I would say for me, I think renewable energy is not some sector which now can give you a bigger story or something like that. So one should refrain from entering into renewable energy sector.
Okay. One question we've got from our viewer, Riya Shah from Surat. She wants to know from you, Ashuji, how can I prepare my portfolio ahead of the budget? That's her question to you.
I think the easy answer would be that basis expectation probably, I mean, don't go by the traditional railways or, I mean, this irrigation or infra theme. Or probably defense also. But this time we might get the way, I mean, last year what has happened globally, defense could be one theme which can, I mean, the outlay could surprise us. So I think as of now, if there's one theme which you want to carry through budget because of some positivity, and it is always buy on rumors, sell on news. So before budget or by the time the news comes out, people will jump on to buy a particular sector which will be announced in the budget, and one should get out before and much, I mean, while the news is on. So I could say probably, I mean, I mean, probably the safety now lies with defense.
Safety now lies with the defense. All right. Thank you so much, Ashuji, for being with us on the show and helping us with all your wonderful insights. Always a pleasure to speak to you and seek such wonderful insights for all of our viewers. Viewers, in case you too have any questions about your investments in mutual funds, your SIPs, stocks, or gold-related queries, then please do send us on the number that's flashing on your screens. And don't forget to tune in tomorrow morning again, 9 a.m. sharp, for all the market opening action with Abha Bakaya.